Every business we have covered on this channel has involved buying something: a machine, a trailer, equipment, ingredients. This one is different. What you are buying is a credential, a piece of paper that costs under $500 to obtain, that you can have in hand within a few weeks, and that lets you charge $150 for a single appointment that takes under an hour. No outdoor work, no physical labor, no inventory, no employees on day one, just you, a folder of documents, and a commission from your state government. This is the mobile notary and loan signing agent business, and it is one of the most overlooked income opportunities in the country for one simple reason. Most people think a notary is just someone who stamps papers at a bank. That is the lowest earning version of this credential. The version worth building a business around is something else entirely. Here is the distinction that changes everything. A standard notary public earns state-regulated fees per signature, typically between $2 and $15 depending on the state. That alone will not build a meaningful income, but a loan signing agent is a notary who has received additional training to handle real estate mortgage closing packages, the stack of legal documents a borrower signs when they close on a home loan or refinance. Title companies and escrow offices need someone physically present to witness and notarize these signings, and they pay between $75 and $200 per appointment to get it done. In busy real estate markets, experienced signing agents complete 2 to 4 of these appointments per day. At $150 average per signing, 3 signings a day, 5 days a week, that's over $10,000 a month. Full-time signing agents in active markets are consistently clearing $72,000 to over $100,000 a year, according to current data from ZipRecruiter and multiple state notary associations. Now let's talk about what it actually costs to start, because this is where the business genuinely separates itself from everything else on this channel. Your notary commission itself, the state-issued credential, costs between $50 and $400 depending on where you live. This covers your state application fee, a background check, and in some states, a short exam. Most states process commissions within 2 to 6 weeks. The National Notary Association's loan signing certification, which is the most recognized credential in the industry and what title companies look for when vetting agents, costs around $65 to $200 for the training course and exam. Errors and omissions insurance, which protects you if you make a mistake on a document, $100 to $200 per year. A dual tray laser printer. You absolutely need this for loan signings because packages run 50 to 200 pages and must be printed on both letter and legal size paper. A quality used unit runs $150 to $300. A scanner, or all-in-one with scanning capability, for returning completed documents, another $50 to $150. A notary stamp and journal, $30 to $60, and a reliable vehicle with basic fuel and maintenance costs factored in as your primary ongoing expense. Total startup investment, $500 to $1,500, making this one of the lowest startup costs of any business capable of generating 6 figures annually. The return on investment profile here is genuinely exceptional. Most signing agents recover their full startup cost within their first 3 to 5 appointments. Here's how the work actually flows, because understanding this removes the mystery around where the money comes from. When a homeowner refinances their mortgage or closes on a new home, a title company or escrow company manages the legal paperwork. That company needs a certified notary present at the closing to verify identity and witness signatures on a package of documents that can run anywhere from 100 to 250 pages. They post the job through a platform, SnapDocs, Signing Order, or the National Notary Association's Signing Agent Registry, or they call agents directly from their approved vendor list. You accept the assignment, print the package, drive to the client's location, which could be their home, their office, a coffee shop, or a hospital room, walk them through the documents, witness the signing, notarize the appropriate pages, and return the completed package either by scan back or overnight shipping. The appointment itself typically takes 45 minutes to 90 minutes. You invoice through the platform or directly, and payment arrives within 2 to 4 weeks. The income ceiling is a function of how many assignments you accept and whether you work through signing service platforms or build direct relationships with title companies. Platforms are easier to access early on, but they take a cut. paying you typically $75 to $125 per signing. Direct title company relationships pay $150 to $250 for the same job, no middleman. Building those direct relationships is what separates agents earning $40,000 a year from those earning over $100,000 on the same number of signings per week. Getting those first assignments requires being on the platforms immediately. Create profiles on SnapDocs, Signing Order, and the NNA's Signing Agent Registry on day one. These are the directories title companies search when they need an agent in a specific zip code. Fill your profile completely. Photo, commission details, certification, insurance, printer confirmation, availability, and the specific counties you cover. Agents with complete profiles get contacted first. A Google business profile for your notary service generates local inbound leads for general mobile notary work. Hospital signings, power of attorney documents, estate planning documents, which are jobs that don't come through the real estate platforms but pay meaningful fees and have almost no competition in most markets. Hospital and jail signings in particular are a niche many agents avoid because they're logistically inconvenient, which means less competition and often higher fees for the agents willing to do them. Evening and weekend availability is a significant competitive advantage in this business. Most loan signings happen after working hours and on weekends because the borrowers requesting them have day jobs. Agents who are consistently available outside 9 to 5 fill their calendars faster than those who restrict themselves to business hours. Now the specific things that end signing agent careers early. Errors on loan documents are the primary risk. A missed signature, a wrong date, an improperly notarized page. These require the entire package to be re-signed, delay closings, and generate complaints that damage your platform ratings and your direct relationships simultaneously. The solution is a pre-appointment checklist and a post-appointment verification pass before you leave the client's location, every single time. It takes 10 minutes and it's non-negotiable. Skipping errors and omissions insurance to save $100 a year is a decision that can cost you tens of thousands of dollars in a single incident. Document mistakes in real estate can delay closings and create financial damages. Your E&O policy exists specifically for this exposure. Working exclusively through platforms without building direct relationships. Platform dependence is a genuine business risk. Fee structures change, platform policies shift, and agents who have no direct title company relationships have no fallback. From your first month, be actively building direct relationships in parallel with your platform work. The scaling path for this business is built around leverage rather than volume. Remote online notarization, which is now legal in most states, allows you to notarize documents entirely through a secure audiovisual platform without traveling anywhere. This dramatically increases your capacity because you eliminate drive time entirely. Full-time agents who combine in-person loan signings with remote online notarization are effectively running two businesses simultaneously under the same credential. At the top end of this business, experienced signing agents who build a full roster of direct title company relationships and offer both in-person and remote services are billing between $7,000 and $12,000 a month, working 4 to 5 days a week. No employees, no physical space, no inventory, just a credential, a printer, and the discipline to show up prepared every single time. Under $500 to start, a credential you can have in weeks, and a real estate market that needs notaries every single day, regardless of what the economy is doing. If this kind of breakdown is useful to you, subscribe to the channel. Every video, one real business, the actual numbers, and an honest picture of what it actually takes to build it.